Dear viewers, welcome to our channel GVS Bank Academy. Today I am going to discuss about CAIIB Advanced Business and Financial Management. Important questions for forthcoming examinations. We are also providing coaching for JAIIB classes for October 2023 exams. The online classes are starting from first week of June 2023. For June 2023 CAIIB examinations, revision classes are in progress. Interested members are requested to contact on this number. Important questions. Question number 1. The reinvestment assumption in the case of the IRR technique. Reinvestment of the inflows in the case of IRR technique. Assume that the cash inflows from the project can be reinvested at the project IRR. Project inflows can be reinvested at the project's internal rate of return. That is the question number 1. Number 2, free cash flows can be calculated as gross cash inflows minus gross investment. Free cash inflows can be calculated gross cash inflow minus gross investment during that period. Question number 3, first Indian bank to issue green infrastructure bonds in India. Green infrastructure bonds in India as per RBI directives, banks are issuing. Which bank? Yes Bank in 2015. Yes Bank in 2015. What are the disadvantages of issuing green bonds? 4. Any bank green infrastructure bonds and not utilized as per the terms of conditions, then claims for damages in the event of green default. Claims for damages in the event of green default means they are not utilizing for that purpose, then they have to pay damages. That is for this. Question number 5, primary object of valuation of the company. Primary object of valuation of the company, the estimation of company's true worth at the present market conditions. What is the company's true worth in the current market? Estimation of company true worth in the current. 6th, risk associated with capital budgeting for international projects. At the time of investment in international projects, what are the risks involved or risks associated? Exchange risk is already there. Country risk, which country we are going to involve? Country risk is part of credit risk. Country conditions also credit risk, as well as risk and return and risk. Return and risk of foreign investment. Whether you are getting suitable return, for that risk we are taking. Risk and return or return and risk. These are the things. 7. Risk analysis techniques. Risk analysis techniques in the financial management. Sensitivity analysis, scenario analysis, Hiller model. Now they are asking in the examination, Hiller model related to risk analysis techniques. Sensitivity analysis related to risk analysis techniques. Simulation analysis or what if analysis related to risk analysis. Decision tree analysis risk related to risk. Corporate risk analysis. These are the risk analysis techniques in the financial management. Risk analysis. 7. 8. Frequently traded shares on any stock exchange. How we can determine that is a frequently traded shares on any particular stock exchange. 8. The traded turnover of stock exchange during the 12 calendar months preceding the relevant date, preceding the amalgamation date, preceding the particular date or public announcement is at least 10% of the total number of shares of such class of shares. So it means to traded turnover on any stock exchange during the 12 calendar months preceding the relevant period is at least 10% of the total number of shares in at least 10% of total number of shares of such class of shares of the issuing company. It means, suppose total issuer company shares outstanding is 10,000 shares, for example. Total issued shares outstanding is 10,000. For this example, if you are taking 10,000, at least 10% means 10,000 into 1,000 shares. The traded turnover on any stock exchange during the 12 calendar months preceding prior to the relevant date, at least 1,000 shares. So if you are taking 10,000 shares, at least 1,000 shares means 10% of the issuing shares are traded. That is frequently traded shares. Very, very important. 9th, infrequently traded shares on any stock exchange means if the above turnover is less than 10% of the total number of shares of such class, that will be infrequently traded shares. At least 10% of the total number of shares frequently, less than 10% infrequently traded shares on any stock exchange. Both are very, very important. 10. Factors involved in determining the exchange rate at the time of mergers, acquisitions. Factors involved in determining the exchange rate. A. Book value of per share. What is the book value of the company? Book value means net worth by number of equity shares. Earning per share, EPS, net profit after tax divided by number of equity shares. Market price per share, market price in the stock exchange. D. Dividend discounted value per share. Dividend discounted value per share. Discounted cash flow value per share. These are the factors involved at the time of determining the exchange ratio at the time of mergers and amalgamation. One is book value, another one is earning per share, third one is market per share, D. Dividend discounted value per share, discounted cash flow techniques. This first day, these are the 10 questions I am uploading today. Thank you very much viewers for extending support to our channel.